Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Well, there's positive news on a technology and a retail stock that our strategists this time around want you to know about. Shiraz Mian here with me at the desk, as is Ben Rains. And Shiraz, we're going to start with you. You have the technology pick.
That's right, yeah. So I have Oracle, needs no introduction. The one caveat I do want to flag ahead of time is that Oracle is reporting this week.
The 12th.
The 12th, yeah. So after the markets close on Thursday, there's always a risk getting into a company like that ahead of its earnings release, particularly for folks who are looking at it as a trading idea. I'm not presenting it as a tactical trading idea. I'm presenting it more as a long-term investment opportunity. And the reason I like Oracle as a long-term investment opportunity is that the stock is going through a multi-year transition from on-premises installed software to cloud-based software. This has been in place the last couple of years and has been a source of disappointment for the street that the transition hasn't moved ahead as quickly as many had been expecting. Myself included, I had it in the top 10 portfolio a couple of years ago in this hope, and was a little bit burned on the idea. So it hasn't gone up as much as the rest of the tech space. It is a software company, a leader on the database side of enterprise software. It's up about 21% year to date. The tech space as a whole is up 28, 29%. Valuation is very compelling. It's trading at about 13, 14 times forward 12-month earnings. Steep discount to the software peers, also to the broader market. The valuation discount is apparent on other conventional valuation metrics as well. So if you have the holding horizon to hang on to this for about a year, preferably 2 years, I think you will come out ahead. It's cheaper, has defensive attributes, pays a dividend, buys back its stocks, and I think the next few years it is on the cusp of much stronger growth driven by this cloud initiative.
Well, meanwhile, in the time being, it does have a pretty respectable record as far as earnings and consensus beats. And
it does. It didn't do that good the last quarter when it released results. The stock was down a tad bit. The 52-week high is around $60, which was ahead of its last earnings release. It's currently trading in the mid-50s. I think this stock should be in the mid-70s. And once the street gets more confidence in this cloud transition, its move higher would be a lot more swifter and clearer than it has been in the recent past.
so you say it's a good long-term hold.
It's a good long-term hold.
All right, Ben, you're running with Nike.
Yeah, exactly. And like Shiraz said, this doesn't need much introduction. It's Nike. Everyone knows Nike, even if you have no idea what their stock price is ever doing. But it actually hit a brand new 52-week high this morning. It's up 8% in the last month, 31% in 2019. And also, like Shiraz's, mine reports, or Nike reports, in 2 weeks from now, 2 weeks from next Thursday, so the 19th. So once again, it can be a little hairy to buy a stock right before earnings, as you never know how Wall Street's actually going to react. So it could be the big catalyst that propels it to more 52 weeks highs heading into 2020. But really what I want to talk about Nike is because their digital transition has been probably as good as any of these companies, and they've really been able to regain that growth in North America, where Adidas had kind of come in and taken some of their spotlight over the last couple years, but they're still the biggest retailer in the sportswear business. They're way bigger than that up-and-comer Lululemon, even though the stock is up so big. And so CEO Mark Parker and the company expect that their digital division is going to take up 30% of revenue by 2023, and it's at 15% right now. So they're making that transition very successfully, and they're also not getting rid of their own brick and mortar business. They're just doing all of their own direct to consumer. So they're even cutting ties with Amazon. That's how confident they are in their own business. And really the only places that you're going to find Nike that's not a Nike outlet or a Nike store or Nike online is places like Foot Locker and some Nordstrom, some higher end places where people are buying expensive shoes, which is really what Nike's whole business is. And then, so I quickly want to just look at my mouse now. Well, now my mouse is not working, but I was going to show you their sneakers app, which is really something that they're rolling out all of these new digital things, and this is for anyone who's a big sneaker lover. They literally have an app that has a calendar when you can buy their new releases. They're sometimes $300 for shoes,
wow.
And this is really their business going forward. So if my mouse was working, we would see that the next couple years they're supposed to grow 8% and then 8.5% this year and next year, which would be bigger growth than they've seen in the last 4 years. So really impressive stuff for Nike looking ahead. And then there's that bottom line growth as well. And like Oracle, they also pay a dividend. They just raised it by 11%. So Nike really looks like that long-term sportswear giant that's really in it for the digital age, and Adidas and Lululemon's insertion in this North American market really isn't hurting them at all, and they're continuing to grow in China and pretty much everywhere else in the world as well. So Nike looks like a really good long-term stable stock if you're looking for a retailer out there.
It's a bold move, cutting your ties with Amazon at this
That's right.
particular
Yeah,
time,
exactly.
isn't it?
That's how confident they are in their own business.
App for sneakers.
Yeah. That's right.
Yeah,
That's
right.
the way to go.
All right. Do either of you own either of these stocks?
No, I don't own or in any of the portfolios I manage Oracle.
Okay.
No.
Or in your personal portfolio?
No.
And
No,
Ben?
neither do I know.
All right. Well, thank you both for those recommendations. And don't forget, there's more stock information to take note of on our website, Zacks.com. Just get over to the homepage and start taking note. And here's something else you may want to take note of if you haven't already. For a limited time, you can take a look at Zacks Market Insights, its buys and sells. You can even take a look into some of the services that up to now have been closed to other people besides subscribers. You can do that, and you can do it only for a limited time and only for $1. For more details, get on over to the webpage Zacks.com/promo. That's where you'll find more details. With Shiraz and Ben, I'm Terry Ruffalo.